Winning Move Podcast. I'm your host, Stratton Brown. I interview successful entrepreneurs from around the world to see what moves they've made in their lives to get successful and, more importantly, stay successful. I'm here to make sure you can create a better life for you and your family. Let's tune in. Hey guys, welcome to the Winning Move Podcast. We have an awesome guest on today. My man, Tim. He is a wealth of knowledge. I met him, I think I met you at Investor Fuel, and you're the one who you always have amazing insight in other people's business in the room. And so I'm glad to have you on. And he's going to be worth $1 billion by age 55 for sure. We were talking about it. Thank you so much for coming on, dude.
Yeah, man. Thanks for having me.
So let's start off. How did you get started in business overall?
So I went into the Marine Corps after high school, really without a plan, without any guidance. Didn't have anybody telling me I should or any of that. It's kind of funny. I mean, we went to a party one night and a guy had come back from Navy boot camp and he was pulling all the chicks. So my buddy was like, dude, we ought to join the Navy. And I was like, nah, if anything, I joined the Marine Corps. And like, that's how it happened. It was really all about chicks. But got out, put my resume on a website, got a job as a project manager, ended up working for a house flipper. Then from there, ended up going and working for a different house flipper as his, what we would call him now, an acquisitions manager. Then met a hard money lender and went into a partnership with him. Did a bunch of owner finance notes, then met my wife, went into partnership with her, started one of the biggest flipping operations in the nation, almost went bankrupt in 08 and 09. When I say almost, like, I mean, we were really close. Came out of that, created this little company called the REI Expo because I missed all the networking. From there, I got invited to speak somewhere, ended up meeting Blackstone, started B2R Finance with them, ended up selling the expo. It was REI Expo, sold it to Think Realty. Now it's the Think Realty Expo. And then ran the Blackstone company for a couple years, merged that with Finance of America. We just took that public last year. Just kind of been being a little lazy the last 4 or 5 years, enjoying the fruits of my labors, the first, call it 15 years of entrepreneurial ventures, and been borrowing a lot of money from RCN for the last 5 years. CEO and I became really good friends. And from there, here I am. I'm the executive director. We've done 1.3 billion this year. We were trying to do 2. We've crushed last year in a horrible market. And we're excited to do 3 or 4 billion next year and eventually get it to 10.
How important was it when you worked for that other guy for a while? How long did you work for him? What did you learn?
Yeah, I will never forget the first house I bought for this business. It was 811 Kelso in West Dallas. And this would have been in 2002. I'd spent about 6 months as his project manager, just running the contractors, about 3 months. And then he got me into where I had to start showing the houses for the owner finance showings. And then he said, all right, now I'm going to teach you the acquisitions. And it had a for rent sign nailed to the tree. And he said, all right, we're going to call and try to buy this house. And I thought, you're an idiot. It says for rent. It doesn't say for sale, right? Just a young guy. And we called, and it was this out-of-state sister, these 2 sisters. One was out of state, one was in state. The out-of-state one was answering the phone. And it was just crazy. Like, no, it's not for sale. Yes, you can go look at it. We call and make an offer. They want 89. We offered like 40. And then they immediately dropped their asking price to 63,000. And to me, that was such a pivotal moment, man, because the year before I'd made $1,810 a month as a sergeant, right? If I was in combat, I got an extra $100. And these people just straight up took $26,000 off their asking price without thinking. And I just remember thinking, wow, because I would have had to work an entire year for that amount of money. And it was the beginning of my lesson that what's a lot of money to some people is not a lot of money to others.
Very true.
We ended up buying that thing for like 48 grand. And I was hooked. I was hooked on the juice of the deal. And I still love the juice of the deal.
When did you decide to leave them and why?
So I was ending the kind of an 18-month period. It was Christmas. We're having a party at one of the owners' houses. They owed me a bunch of back commissions. They were kind of robbing Peter to pay Paul on construction draws and stuff.
Yeah.
And I was the Marine, right? I was loyal. I wasn't going to go anywhere. And then finally, like I was at that Christmas party watching them live kind of high on the hog. And afterwards, I go up to my boss, and like his name is Tim as well. I was like, hey man, like, what about that 13 grand you owe me? Like, could I? It's Christmas. Like, I'm overdrawn. Like, could I get some of that? Like, he's like, oh, we just don't have it right now. I was just like, yeah, all right. And funny enough, the next day, the people across the street, I still went to work. People across the street came over and wanted to sell me their house. And I should have taken it to the company. But what I did instead is I wholesaled the house. I took every penny that they owed me and then what my commission would have been on it. And then I gave them the rest. And that dude, he dog cussed me and told me I was stealing from the company and all that. And I'm like, nah, man, we're true though. And I'm done. But
right, you didn't even have to do that shit.
I didn't have to, but
that's awesome.
I've always done what's right.
Yeah.
And it just keeps paying me back. So like one of the guys that I was buying from for that company was a Homevestors guy. His name is Bobby Rohn, great mentor of mine. And so Bobby, one day as a joke, had said, they ever make you mad, come east with the geese. Because he lived out east of town. And I called him one day. I said, Bobby, they made me mad. And he goes, come on. And so that was March of 03. I mean, March of 02. No, 03. And I go into Bobby's office on a yellow pad of paper. He goes, all right, boy, I'll pay you $800 to buy the house and $700 to sell it. I said, done. Because all I heard at that time was $1,500, right? Like if I could buy it and sell it, maybe $1,500. And so, man, I started going to the RIA clubs and I knew everybody in town. I started building my constant contact buyers list in 2003. I had a website called wholesalehouses.net. I may have been the first like real like platform, but like I wasn't a platform to me. Like I was just trying to make money.
Yeah.
And so that year I bought 111 houses and wholesaled 87 of them. So it was the first year I ever made six figures.
That's a lot of money back then too.
Oh yeah. Now I learned the hard way that the government wanted part of that, but that's another episode of the podcast.
So they were Homevestors. Did you ever buy into Homevestors?
Yeah. So fast forward at the end of that year, Bobby had told me he was going to take me to convention because we were number one in the nation. And he didn't. He told me after a year we would start buying rentals, and then he decided we weren't. So yet again, out of arrogance and pride, I quit. My dad thought I was crazy. I went to that hard money lender. We built a 63 note portfolio in a year and a half. That was a great, great investment in my future. It's where I learned kind of the value of delayed gratification. But through that, I met my wife, and you'll see here, it was March 16th, 2005. She assigned me a house for $3,500. And I turned around. I keep this framed in front of me. She had a Homevestors franchise, and I turned around and assigned it to someone for $8,000. So the joke is we got married to keep it all in the
family. When did you leave Homevestors? I think Homevestors is awful. My uncle owns one, and they take every fucking penny. That's just my personal opinion. The fees are crazy. When did you leave?
I completely disagree with you. I left Homevestors that time during the Great Recession. In 2009, my wife had cancer. We had another kid. financial collapse. Our 5 years was up. It was just kind of like, love you, bye. And then in 2000, I guess it would have been 12, I bought back in and I became the largest development agent in the nation. And I sold that in 2018 or so.
Did you sell it as a business or did you just sell your rights to the franchise?
Sold it as a business.
That is awesome. How'd you get to be such an amazing speaker?
The Marine Corps, right? I mean, I'll never forget, one of the greatest compliments I ever got in the Marine Corps was I had this guy named Joe Arnett, I think, if I remember correctly, come up to me and tell me, Corporal Herriage, I would follow you to my death. And he had been a high school football coach. And right, so growing up in Texas, I know you Californians act like you have high school football, but you don't. Growing up in Texas, man, high school football coaches were your idols. Okay. And like to have this former high school football coach telling me he followed me to my death, like just meant, or his death, it just meant so much. And, you have to, they teach you bearing and tact. And I mean, I'm nervous as heck when I'm on a stage. Are they going to like me? Am I going to do a good job? Am I going to deliver the message that I want to deliver? So I think it's just like learning how to do it. And also, like in the Marine Corps, there were times I had to give commands to a 3,000 person audience. I mean, and it's not like, will you please listen, right? It's like, it's aggressive. It's and you call commands and cadence, and I'll do it with you if you want when I'm out there this weekend. Because I can still do it. My family hates it, but like we'll be in a parking lot, I'll be like, arrow left, arrow left. Like, I'll just like start belting it out, and they're like, shut up. So now I guess that's how I learned how to speak, was the Marine Corps.
Have you always been so? I remember when I met you at Fuel, I was like, bro, this is the guy I got to learn from as far as like working an event, because you're amazing. You're an amazing people person overall. Has that like been natural? Have you like taken classes to develop that? Because like that's what I remember going. I was like, bro, this dude is a fucking savage. You talk to everybody. Everybody loves you. Like you're just amazing at it.
Well, I think the book, the How to Win Friends and Influence, is something that just comes natural to me. But it's something people can read. I'm an intentional listener, right? I love my wife and my kids, and if I'm not going to be with them, I'm going to be making money. And people do business with people they know, like, and trust. So I need to make sure they know me. And the number one way to make someone like you is to act like you give a shit about them. Am I allowed to say that?
Oh, yeah.
Oh, yeah. You just dropped it. Yeah, we're good.
Yeah.
Because when you act like you care about someone, not act, I genuinely do. They actually like you automatically. Right, because you've appealed to a part of them that is their most important part of them. It's them, right? So I feel like I am on my game when I'm being an intentional listener, when I'm paying attention to what people say, how people say it, and I'm not thinking about myself. And I do it very intentionally, and it takes a lot out of me. Like sometimes these events, like I'm just like on it like 18 hours a day. And then I get home and like, I'm done. And I hate that. But I'm the guy that, I take the last possible flight out. Stay, like tomorrow, I'm coming to your event. I'm on a 9:30 p.m. flight, and I don't land in Fresno till like 10:30 or 11. I'll go straight to my hotel room. I'll get some sleep. I will work from 7 a.m. until midnight. We're going to go have a big dinner. And then I'm on a 6 a.m. flight back to Dallas.
Yep.
I will be sitting in my living room watching the Cowboys-Vikings game with both of my sons by 3:20 p.m. on Sunday. And that's what's important to me.
Oh, yeah. And bro, you buy everybody drinks. I mean, I remember like you're the first person I came. I was like, bro, I love what you're doing. I love everything you're doing. Um, Amazing speaker. Talk to me about how you got through the bankruptcy thing. I mean, because a lot
Yeah.
of people are about to lose their ass, or they may be struggling, and like you really got to persevere, have the right mindset to get through it, and all that other stuff.
Well, so by the time 2007 came, I was the big dog. I was the person that everybody knew. I'd flipped 143 houses by the time August came. And I don't mean wholesale. It was buy, fix, sign in the yard, sell. I had 2 wrap trucks. I mean, we were the big cheese. And when the subprime collapse happened in August of '07, I guess I've always, my wife says it's because I didn't really have a dad in the house growing up. I don't know. I've always listened to people. I've always sought out mentors. I've
Yeah.
always taken advice from people that have been where, probably when I got out of the Marine Corps, my gunnery sergeant gave me the book, The Richest Man, Rich Dad, Poor Dad.
Mhm.
And that meant a lot to me. And then I also read the Gary Keller Millionaire Real Estate Investor. And that
Okay.
talk about, skipping the steps of the ladder of success by getting on the rung where your mentor is. But anyway, after the '07 thing happened, I just called people. I was like, what does this mean? And a guy I really respected named Jeff Drake in Detroit said, we're effed. I was like, no. Like that's conjecture. Like, what do you mean? He goes, no, we're effed. He's like, anything you got, dump it. And I did it. I had 38 vacant houses, lost well over $1 million fourth quarter '07. Finished getting rid of the rest of them in first quarter '08. Lost another $1 million that quarter. And then I was left with nearly 100 rent houses that I'd kept through the time of easy money, through the time of, well, if I didn't sell it, I'd keep it. If no one would buy it, I would keep it. And I see a lot of people doing that these days, Stratton, and it worries me. It worries me that they're keeping houses that have already gone down in value or that are going down in value right now. And my message is eat the frog. That's another great book, Eat That Frog. Right? Like if it's going down in value, get rid of the thing. Right? If you're upside down, get rid now, because we could see another 10 or 15, 20% in some markets in the next 6 months. And bad now will be death defying, And so, number one, how did I make it? I got rid of everything I could. The things I couldn't get rid of, basically all of '09, my job was to evict people and then put a sign in the yard that said Dueno a Dueno, owner financing available, and get whatever cash I could down and then take it to the bank and get them to leave me alone for another month. And then we owner financed a lot, and it saved us, but it also, man, we gave away so much equity.
Yeah.
Right. But, necessity is necessity, right? So, I mean, that's what we did. We focused inward. I let go of my pride. I went from being number one in the nation to the guy that had to get up in the morning, and my wife went back to be a realtor. Yeah, it was tough.
How did that conversation go with your wife, and how supportive was she throughout all that? Because I don't think you can do this on your own.
If you've ever watched the show Billions, Jennifer is my Wendy. She has always been. No one's ever believed in me as much as she does. No one's ever been as kind to me as she is. I mean, the 2 most expensive presents I've ever gotten in my life were from my wife, and it's kind of funny because I'm one of those. I don't buy myself anything. I spend money like crazy, but I don't buy myself anything. First Christmas, she bought me this Tag watch, and I loved it. And then whenever I became the managing director of B2R Finance, we were in Manhattan to sign the paperwork. She went down to the Breitling store and bought me a limited edition Breitling. Now, man, my wife is the best there is at. Now, it's not easy, right? Like she's not a lay down, right? I mean, she's going to make me have the hard conversations with her and respect her and treat her and tell her the truth, right? Not the salesman. Oh, everything's going to be okay. She's like, no, okay, great. How? Right? Like, what's coming next? Right? Like, so yeah, she's She's my Wendy.
I love it. We got a little bit of some fire emojis right there for that bomb you just dropped. Do you wish you would have, and we'll go back to the Wendy, your wife thing. Do you wish you would have transitioned all of your houses to rentals when you sold them off? Like, because I know I talked to a really big flipper here who has hundreds of active projects. And he was like, we are set up to where we borrow money at a good enough rate. We know where we're buying it at. I can transition to auto rentals, and I've told our investors we will weather the storm and then sell it off later.
No, I don't wish I'd kept them as rentals, and here's why: a house can be an anchor, and I've always said you can't rehab your way out of a bad buy. And if you're upside down on a house right now, or let's say you could barely break even, but let's say you clear that out of your mind, you clear that off of your
100%.
responsibility, you clear it out of your universe. Well, now you are positioned to take advantage of opportunities today. The other is almost, I hate to say it like this, it's almost like having an STD. I mean, it's just a problem that's going to stick around and just pop back up and bother you all the time.
Okay. We got that. You owner finance those. Talk about doing business with your wife, some tips that you have just from your learning that have made it go easier and lessons you've learned. A lot of people do it. A lot of people don't do it. I was skeptical about doing business with my significant other just because I didn't want to fuck shit off, honestly. And like, as a driver, you are a hard person to work with in the first place.
Yeah. So she and I are both highly type A. So we work horribly together.
Exactly.
I think it comes down to having clear lanes, right? Like, she's got the stuff she does and I got the stuff I do. And one of the biggest things I've learned is, for me to make her the happiest, I actually have to be willing to upset her, which is very strange, right? Because we want to protect our spouses. We want to be the hero of the story. We want to really overachieve and never let them down. But ultimately, when it works the best is actually when I'm willing to upset her. When I'm like, no, honey, look, this sucks. It's awful. We're going to lose 20 grand. And, because then it kind of, she's a nester, right? She wants to protect what we have. And so as long as she knows worst case, she can plan for it. She can, she's okay. Whereas I'm always like, I only know the best case, right? So it's got to where now she's like, well, what's in the pipeline? I'm like, nothing. And so then when I get 15 grand, it shows up. It's like, oh, that was cool, right?
Nice.
It's we got this big house that we're doing right now. It's probably a 1-2, 1-3. It's a 150-year-old house. We're going to make it an Airbnb here in my town. We're 200 grand over budget. And I was like, honey, I'll just pull more money out of the stock account. It's fine. Don't worry about it. Like, just execute the vision. We got this, right? Yeah. We know what we're doing. And what we're doing on that house is it's a legacy project. There's only one of those in the world.
And so it's inherently valuable too. At the same, it's like a beachfront property. There's only one of them. Yeah, you could say it goes down in value, but it is inherently valuable because there's a scarce amount of it.
Yeah, I mean, it's a 150-year-old Victorian home on 3/4 of an acre, half a block off the town square.
Yeah, bro.
Like, there is only one of those in Rockwall, Texas. Like, period. You could build one today, and 150 years from now, it would be the second one.
Exactly. Talk about, so right there, being the rock and like the certainty of what you're doing. Like, I got it. How much of that are you doing? And as you're leading teams, I feel like you have to be the rock, essentially. Whenever things are going bad, are you showing the team like, hey, you know what? We're in a little bit of a hard spot. We got to fucking get going. Like, inside of one of our companies, like, hey, shit's going to get tough for like 6 months. I promise you. Like, but we got to fucking buckle down and be the best no matter what. That's the only way we get through it.
I think a lot of leadership is misunderstood through memes and social media. And, one of the worst things right now that I see people doing in real estate is profit first. And
Okay.
the worst part about profit first is it's great for you to do that in private. It's horrible for you to tell your team that. Leaders have to eat last, right? Your followers have to believe they will be fed.
Yep.
So profit first means team last. And the team needs to hear team first. Now, what you do in your executive meetings is completely different, right?
Yep.
So I think we as visionaries, as entrepreneurs, oftentimes go to seminars or hear things, and then we go repeat it to everyone. Case in point, there were some military veterans in one of the masterminds we're a part of that they were big on profit first and let their team know it was going to be profit first. And they were worried they were losing their team. And I told them, I said, well, the problem is you just literally got a bunch of veterans who are like conditioned on team first, and you just told them team last. Like, it's just your vision and your message just aren't lining up. So I think, and also here at RCN, we've 30-something salespeople. I don't manage them. Our vice president of sales does, and he is excellent at being patient. He's excellent at kicking them into gear when he needs to. He's excellent about caring about their family. And I say that because not like I don't care about their family. I'm just not excellent at it. I mean, I was at a call today and there was a lady talking, and I had to say, I'm sorry, who are you? And, she works for our company. In a 300-person company, you just can't know every single person. So I think you have to be willing to let people do their jobs, but insist that they do their jobs simultaneously.
Okay. I like that. We got that. Tips on successful life. How are you managing showing your kids about money? And I don't know what your thoughts are with that, to where like I want to show my kid about entrepreneurship. I really could care less if he goes to college or anything else. I want him to get good grades just because you apply yourself. School's not hard. But I want to show him how to actually make money and think differently.
I think so much of, the whole nature versus nurture thing, it comes from what you talk about in front of them. So we're always talking about investing. Right? We're always talking about buying businesses, selling businesses. We're always talking about, big topic of conversation. We went out and celebrated as a family the fact that we paid when I filed my final tax return for 2021 and paid no corporate or personal income tax.
Hell
like,
yeah.
Dad had executed the vision so well that we made the most money we ever have in our life and paid no taxes. Right. And so we all went out and celebrated that, which there may be people like listen to this, like, you sorry bastard, but there's rules and I follow the rules. And if I'm successful following the rules, and if you don't like it, change the rules and I'll follow those rules. Other little things like we don't have allowances. We have an abundance mentality. I mean, my children, they're not going to have debt for going to college, but they're going to go to college. Or the military. I really don't care. Or they can just go live on their own and figure it out for themselves, right? But if you want Dad to continue to support you, you're going to go be in part of a structured continuation beyond the home. And so, like my 21-year-old, 4.0 student, he's almost a commercial pilot right now. Within the next 12 months, he'll be eligible to go work for an airline. He doesn't drink. He works out. He takes his physical conditioning a lot more serious than I take mine. He is just the model young man. And, he's going to graduate college with no debt because he knows when he gets an A, there's no debt. When he gets a B, Dad will take care of 80% of it. When he gets a C, Dad will take care of 50% of it. If he gets a D, not my problem, right? And we know that, right? There's accountability. Yep. My 13-year-old, I just pulled it out of my desk. This is his ledger, right? When he feeds the dogs for me, he gets a reward. When he doesn't feed the dogs, The way it works is, yeah, dad pays someone to clean up the dog doo-doo in the backyard. Well, guess what? That costs $15 a week, and it comes out of this. And I thought, he can. And so he just found a way to earn money for the things that he doesn't want to do. And I think, that's the message we teach you is like, my 13-year-old has been saying he'll be a billionaire since he was 5. And
Hell yeah. I love it. Someone else just said they love it as well. So we got that, showing your kids money, tips on what to do. Talk about selling that company that you sold it to Eddie, right?
Think Realty. Yeah.
Yeah.
It was funny. I did the first one in 2010, 2011 in Dallas. Had 220 people. 2012, I did the second one in Dallas and I had 400 people. And then I was talked into Personal Real Estate Investor Magazine, talked me into going to Houston and doing one that fall. And we had 200 people. Well, then the third one came around in 2013. And this was the magic year for me. We went from 400 to 800 in the Dallas one. And then we did one in Chicago. I'm in Baltimore and had 200, Chicago and had 200, and LA and had 200. So it was like 200 was kind of like the first year number. Well, the interesting thing was by doing the third one in Dallas and having 800, I got the attention of the 5-star conference because the lady that did their contracts was a speaker at mine, and she got me to speak at the 5-star conference in Dallas. Well, at that 5-star conference, I met Blackstone, but also the former owner of Think Realty, Mike Wren, was in the audience as well. And literally simultaneously, I ended up starting a new venture with Blackstone and got interest in buying my other company from one speech that I almost didn't go to.
That's awesome.
So that's how it happened. I mean, it's just after that, I started talking to Blackstone. I started talking to Mike. It was clear I wouldn't have the bandwidth to do both of them. And then coming up that January of 2014, we had like 1,800 people at the one here in DFW, and that kind of sealed the deal with Think Realty.
Oh yeah. Well, from what I've seen, like it grows in those areas, right? Like, because there's no word of mouth when you go do it in Chicago, and then people are going to want to see more. Then you got to do it there again, and
right. Yeah, I mean, and you just have to stick with the formula, right? I mean, and the quick way to the quick way to failure is expecting rapid success.
That's a good one.
When I used to have Home Investors franchises underneath me, I always hated when they made a ton of money out the gate. Like if their first deal was a $100,000 deal, it was almost the kiss of death, right? Because they came to expect it, right? I'd much rather have someone have to actually work through some hard things. That's why some of the greatest investors in this business start in bad times. What's the habit? Bad habits are formed in good times, and good habits are formed in bad times. All of us right now on our investing side are having to relook at our businesses. We can't just waste money anymore. Exactly. We have to really pay attention to, where our dollars are going and how they're coming back to us. And, that's a lot of this stuff that investors are cutting right now should have been cut months ago. Should have been.
But it didn't matter though, because you could just do another deal.
Right. We were wasting money.
But what's it like dealing with Blackstone? And that's kind of crazy. For those of you who don't know Blackstone, how big are they? Like to give people,
I think they're 300 billion now, something like that.
Yeah.
You really, I have to tell you about my first day meeting them. So the chairman had me fly up. I fly up. I take a car over to their Park Avenue office. I'm early. In mine and your world, where we come from, if someone shows up early that flew in to meet us, we have time for them. We'll go, oh, hey, bud. The receptionist lady's like, well, you're early. You're going to need to come back in an hour. All right. I'm all nervous. I'm walking around Manhattan like a fish out of water. Get back, sit down at this boardroom meeting. There's 20-something people at the table. The main guy is not there yet. So I start talking, and the guy that brought me up there is like, here, tell him this, tell him that. This other guy comes in. They're like, okay, tell him this, tell him that. This other guy comes in, tell him this, tell him that. I got to bounce. I got to bounce. I got to bounce. And like, before you know it, 30 minutes. And I'm sitting there with just the junior analyst. The important people have already come and gone. And then the chairman's like, all right, great. Thanks for coming up. We'll be in touch. It's like, I'm in the elevator going down. Like, what the just happened? Like, I don't get it. And I called my wife. It was so funny. I was like, honey, I'm done. I'm on my way back to the airport. She goes, well, what did you do wrong? I was like, I don't know. What happened was I actually did so good, and they felt so trustworthy of me and my experience. They'd heard enough. Like, these people make billion-dollar decisions in 5 minutes, right? Like, and the reason is, and Jazz at Blackstone told me this. He said, Tim, we know we can't be right more than 30%, more than 70% of the time. As a matter of fact, we know we'll be wrong 30% of the time. He goes, the key is acknowledging when you make a mistake, stopping what you're doing, and doing the right thing after that. He goes, too many people worry about the mistakes, not the successes. And, that's when you have real money, that's what you do. You understand you're going to make mistakes, but you just move on, right? It's velocity of capital. How do I make my money work for me and keep working for me faster?
Did they help you at all with your actual decision making? Like, did you pull anything away from them, like working with them? For like a lot of these people who deal with this amount of money, like they have decision making coaches, and like they have to just sit there and they do a lot of thinking, honestly.
You don't have a choice with these guys. Like, I mean, the speed that you move at is unmistakable. I mean, you are going to move as fast as they need you to move, or you're going to die. And so, with Blackstone, you just learn really quick. I'll never forget the first board meeting. We go in there like, hey, I was a head of all sales, marketing, and business development. And they go, hey, how much are you going to need for marketing? I was like, I don't know, like $1 million. I'm thinking for the year. They're like, that'll do for this quarter. Let us know next quarter what the plan is. And I was like literally, I got on Google AdWords and I typed in, I was like, all right, loans for landlords. And I put my Blackstone Amex in there, and I was like, 15 grand a day. Like, whatever. We'll just try to make the phone ring. It's just like, it was rapid fire, find what sticks, find what doesn't, build the CRM like as you go. So many people go to so many seminars and stuff, and they sit around and talk about things. That group of people, they don't talk about it. They throw money and people at problems and fix them and figure it out. They build the Ferrari going down the highway.
That's what I've seen from the most successful people. I mean, startup, real estate, or whatever. If you get something going, bro, it's massive execution at a really, really high level. As soon as you fuck it up, pivot, keep going. But you got to keep solving those problems. And I really learned this as things started to downturns. Like, we are not executing fast enough, right? Just your tempo and cadence completely changes.
Yeah, I mean, execution is one of those things that is so underrated. You've got to have a good plan, and you have to have some sort of plan. You need a roadmap. But I've never seen a car drive itself where it needs to go. I mean, I know they kind of have them now, but they get in wrecks a lot. You're right. I mean, you gotta be willing to. I tell my sons this: life's a journey, right? And you have to be going somewhere. The minute you stop, you die, right? Exactly. Stagnant, lack of motion is death. But the cool thing about a journey, Stratton, is you may start off heading to Denver from Dallas. And by the time you get to Amarillo, you may decide to go to Chicago. And that's fine. There's more roads. Make a turn, go somewhere different. The point is, you got to be moving forward. And right now, what we're finding, and I try to help entrepreneurs with this as much as possible, what saved me from the bankruptcy, your question 30 minutes ago, was I took massive action. I realized that the ball had moved, and if I just sat still, I would get crushed.
Yeah, if you pucker,
And
you die.
yeah, I mean, so like, did I do the right thing? I don't know. I don't care. I'm still standing, right? Like, I mean, and so too many people, I think, right now are nervous. The game has changed, and they're not, and they're trying to learn the game before they play the game, and you can't stop. You have to keep going. You just gotta like you already if you already effed up, it doesn't matter if you f up after this, right? Like, but
Exactly.
if you just stay over here in the f up, like that's just not going to work for anyone.
Exactly. All right. So we got smart, man. You're just having people say this info is amazing. Yo, this info is fire. Stratton Tim, Hard Eyes. I bet you that's Dean Rogers. I bet you that's Dean Rogers. So we got that. Bro, how was it taking that merger? Like, what did that look like? How was it? Was it stressful? How long did it take?
Well, the crazy thing is, they did it without us.
They're just like, all right, bro, here you go. Like,
That's the other part about being a part of a really big company. You don't actually get to pull all the strings, right? Uh, we did some things that as a management group that probably weren't the best things for us. Bought some companies. We bought 4 or 5 companies. B2R did, like just lending.com and all sorts of things.
were they worth it though?
I mean, we still own them. So I guess, the vision was there. The timing was a little off. The merger was the best thing for the company. And it looks like now Finance of America, we went public via SPAC last year. Looks like our business unit, the commercial, the real estate investor finance, may be the only part they hang on to. So, maybe I built something that was worth it.
Right. And a lot of SPACs got absolutely decimated.
It's pretty attractive at like $1.80 a share now.
Yeah, that's true. So when we were talking about you, and we'll transition a little bit into this, you're like, bro, I will be worth $1 billion within an X amount of time. I was like, that's crazy to think about. And you're like, between passive stuff and active stuff, I'll have the net worth. How much were you doing passively when you're actively operating a business? It's a lot harder to actually actively invest, in my personal opinion, because you get the best returns actively operating that business, just flat out. I'd love to
Too
hear
many
more of that.
people listening to this look at the Robert Kiyosaki cash flow quadrant and think that they have to be in only one box at a time, right? And as I sit here today, I am in all 4 boxes. And it's in 7 different companies, right? I mean, I'm an employee of RCN Capital. This is where I spend 70% of my time. I'm self-employed in my Airbnb company, where I have to like help my wife do shit. Like the other day I was hanging pictures, right? Like I don't like it, but she does. And so, I'm still the self-employed guy that has to do that. I got to go over there and show Dum Dum how to put the mulch out, right? Like it's just, still part of my life. I'm a business owner when it comes to things that there's some businesses I own that I'm a part of that I don't work there, but I'm still more the owner. But then one of the best things I did was start investing in other people's syndications, right? Multifamily. I'm a part of, I think, 2,000 plus units of multifamily, 100,000 square foot of commercial. And those are some of the best returns I get because that is truly multiplication of capital, right? I don't do a thing. I can't even tell you the address. I'd have to log into the portal to figure that out. Yep. And so I think too many people, like, they think I have to keep doing this so that I can do that. And it's not that case. I mean, there's so many people listening to this right now that could take $5,000, $10,000, $20,000 and invest in someone else's syndication, someone else's deal. And you never know. That deal may make more money than what you're working on over here. Or that deal may fail, but it doesn't matter. if you make an extra 20 grand, you spend an extra 20 grand doing what you were doing, you're not diversifying. It's all in one basket, right? And so too many people, Grant Cardone says it best. He says he doesn't spend any of the money he earns. He only spends the money that his investment's making, right? So I think too many people don't take their E quadrant money and start putting it in the I quadrant or the B quadrant so they can actually eventually get to a point to where I don't need this other one anymore.
Mm-hmm.
I don't even know if I answered your question on that or not.
I mean, yeah, we were talking about just the diversification of active versus passive.
Yeah.
Right. And so it's kind of simple. You elaborated like, yeah, some was active, some was passive. I love doing a bunch of each thing.
I think Stratton too, when I talk about going to the next level, one thing I've learned is my equity is not multiplying fast enough, right? Being stuck in single family, it's not multiplying fast enough. So one of the mistakes I made, I should have sold everything in the last year or two and got into some bigger deals.
Fair enough.
I didn't, but I will on the next time, probably 2 or 3 years from now. I'm sitting pretty because we refied everything at the top of the market at 80% and 3.25 money. But
yeah,
it was nice. Some of that we actually took and put into syndications. And so, God, one of them, I put 100 G's in it. I'm making 12% of my money right now, and I'm paying 3.5 on that. So that's a pretty damn good multiple.
Yeah.
I think it's all about multiplying your equity, really thinking about velocity of your money.
Do you still own any notes?
I have to think. I don't think so. I've got some hard money notes with buddies here in town that I do, but
no long notes.
No, because what I learned is year 6 is the perfect time to sell a note. That's the reason that in the U.S. we use amortizations.
Mm-hmm.
So the average homeowner sells in 7 years. So they make it where the bulk of the profit is in the first 7 years.
Exactly.
So what I found with those notes was the best time to sell is like year 6, between year 5 and 7, because there's still enough meat on the bone to where you're selling at or above the unpaid principal balance.
Okay. Oh, that one's a really good one. That one's a gem. I don't really like notes. I want depreciation.
Notes.
Like at this point, I want depreciation.
I like to argue with people about it. Owner finance notes is not investing; it's just trading, because it's a declining income stream and a declining asset base. Every month they owe you less and they pay you less, right? Because every month they're paying more principal than interest, right? So your income goes down, and then every month they reduce their principal, so your note receivable goes down. So in essence, an owner finance note is a path to zero.
Yeah, you're not wrong. That is a really good point. And it's like, it's nice, let's say, quote unquote, be the bank. And maybe you want to put some diversity in that. But I think the real power you get in real estate is in cash flow, depreciation, depending on what level you're at, and then the equity multiples. Like you can actually like drive a ton of equity with that note. The note is what it is. You're stuck. You can't do anything else to it. It's there.
Yeah, you can sell it.
Yeah, right. Exactly. You can sell it. And then, yeah, I'm not really a big fan of it. Portfolio, your net worth. What was the key to scaling all these things that you've been a part of?
I think I attract money because I've always been the type that just takes. Well, the number one feedback I got from my officers in the Marine Corps was good initiative, bad judgment. Right? I've always just been one like I'll take the action and figure it out later. And look, I've made my share of mistakes. I've lost plenty of money in this business, but I feel like if you're willing to swing the bat enough, you're going to hit. You're going to get ahead of the count, so to speak.
So we got that transition to rentals. Give me a market update, dude. What do you think is going to happen? How long do you think it's going to last?
So I called it wrong in the summer. I felt like in July and August, I felt like the worst was behind us. I think everybody did. And then, September proved us completely wrong. Now I'm worried about liquidity. The bond buyers just don't want to buy a lot of paper right now. I am worried that values could slide another 10 or 15%, 20% in some places. I'm worried that the pool of buyers that are willing to pay over 6% interest is dwindling rapidly. I mean, you had some that were just fatigued. They needed a place to stay. But now I think the entire housing market is going into kind of a shelter in place, wait and see mindset, which means for the next 3 to 5 months, the buying opportunities will be enormous as long as you have the cash and liquidity to get through the next 6 to 12 months. That's going to be the key. I think you got to focus below median home price properties. If you're into luxury goods or high-end homes, be very, very careful. The most recent comp is the only valid comp right now. I don't care about the average or any of that crap. The most comparable recent comp is the only one that matters. And if it says 300,000 and the other ones say 4, well, you got a $300,000 house. I think we're getting into the worst part of the year for sales and appraisals already, just seasonality wise. Year over year, we're actually still above the average dollar per square foot. We're still in a massive housing shortage. The underlying fundamentals are there, but affordability is putting a glass ceiling on the market right now. And you have rising consumer credit card debt and rising auto debt and rising delinquencies, and the Fed's not going to stop. So everybody's thinking they're going to pivot soon. I don't know anyone that agrees with that. So I'm personally believing that the next 3 to 6 months is going to be probably a dark winter.
How far do you think they take rates? When do you think enough is enough? I was listening to another podcast where they say they usually take it too long for too far, or they don't take it long enough.
Yeah, that's a great question. A lot of the forecasts are saying they're going to take it up to 5. I would imagine, if I had to guess, they're going to get it up to 4.5, and they're going to have to back off.
Why do you think they'll have to back off? Do you just think it'll break it?
We're already starting to see it. Amazon and FedEx announcing layoffs during the Christmas holidays. That's weird.
That's true. That's a good point.
It's the lagging indicators. It takes 6 months to catch up, right? So, I think by the time we get out of holiday retail numbers and we get into January, I think it'll have to slow down. Now, but people got to understand, slow down doesn't mean stop, right? It just means slow down. And but slowing down would be good, because right now the spreads, so normally the 30-year mortgage is 1.5 to 2% above the 10-year Treasury. Well, right now it's 2.5, right? The 10-year Treasury is below 4 right now. But the reason is refinance risk. If the bond buyers don't know how far they're going to take rates, they can't project how long people are going to keep the loans. So what's happening is they're pricing in refinance risk. And so because they need them to keep that note for 6 or 7 years to make the amount of money they need to make, right? If they only keep it for 2 or 3 years, well, there you go. I mean, they're just not going to make enough money. So, it's the uncertainty and the instability is what kind of has everybody a little, I'd say, wound up right now.
Man, you're getting a ton of interaction today, Tim, of just absolute solid gold.
Is what everybody's saying. I hope it's helpful.
How has your guys' underwriting RCN changed with all this?
We've reduced LTVs. We've reduced loan to cost. We had a great 100% financing program that we put on hold right now. I mean, because ultimately we want to keep lending, and we can't keep lending if we're making bad loans. And just like our advice to our customers is, you should be leading the market down, right? We have to build in cushion the same way you have to build in cushion. So, if you're trying to finance anything other than like the traditional, home, you got crazy deals that were easy to get money for, maybe a little harder. Multifamily is hard to finance right now. Interest rates are going up like crazy. Loan to costs are going down. So we're basically back to the 20% down, 70 LTV type stuff. And credit minimum credit scores have been increased to 680 across the board.
Okay. I don't even get why the 10-year treasury is lower, because I was talking to my friend Ian. He has about 700,000 square feet of storage, like 200 doors. He was like, bro, right now I can still buy stuff because everything I buy is on the 10-year treasury. And I'm still getting great debt. He was like, I don't care.
Well, the 10 years low because they're projecting 10 years from now the rates will be lower than they are today. But the spread between the 10-year and the 2-year has that's what you hear them call the yield inverted yield curve. Mm-hmm. That's what we're talking about, is the difference between the 2-year and the 10. So the 2 years at 4.45 right now, where the 10 years at 4.76. So what is that? 45 and 25. I mean, that's 70 basis points difference. That's unheard of. So that's what that projects is, they think that interest rates will be around 4.5 within the average in the next 2 years, but then in the next 10 years it'll be that 3.7. So that's why the 10-year debt is cheaper than the 2-year debt.
I love that. What else did I have for you? Underwriting, get great debt. Bro, I think I've asked you all the questions. Where can people find out more about RCN Capital? I send you guys people. If anybody asks for like lenders, I'm like, bro, I don't even use you guys because we don't really do the single family stuff. But Tim is an amazing man, and he'll take care of you. And I know you guys will take care of everyone over there.
Yes, my guys will take care of you. You don't want me working your loan file. If I work your loan file, it will be done. I guarantee it. You don't want me working on your loan file. Yeah, I mean, just rcncapital.com, at RCN Capital and all the socials. Hit me up at Tim Herriage. If you can figure out how to spell it, Herriage. But yeah, it's we're here to stay, and we're making the changes that we have to make in order to make sure that we're, and investors are so lucky right now, because when I went through this in 2008, there was no capital available, right?
Exactly.
I mean, there was all this opportunity and no capital. And so I think people have to make sure that instead of focusing on what's changed, they need to focus on what's available, right? Like, yes, we're past the 100% financing, 3% interest phase of this cycle. Big deal. Why? That was the best it's ever been, right? But now we're to where you can buy the same house you were paying $300 for in May. You can buy for $150 today, and there's capital available. And if you need help coming up with the difference, go find a private lender, go find a partner, go find a JV partner, find a money person. They're out there. Good deals will still find money, specifically with good executors and good plans.
Oh, I love it. What other words do you have to leave our people with? Where can they find out more about you?
Just hit me up. I've been getting pretty active on Instagram, at Tim Herriage. And I just want to say this. At times like this, people will be negative. Percentages will be misleading. And the possible seems impossible. And one of my favorite podcasts is John Lee Dumas, where he signs off every single episode by saying, you're the average of the 5 people you spend the most time with. And today you've been hanging out with SB and TH, right? So I think now more than ever, if you're an entrepreneur, if you're an investor, if you're just a normal American citizen, it's very important to look at your surroundings, look at who you're spending time with, look at what information and media you're consuming. Because if you're focused on negative, you will get negative. If you're focused on positive, you will get positive. That's why I enjoy hanging out with people like you, Stratton. I mean, it's just always happy. You're sharing the positivity. You show what you do with your children. You show the lifestyle you like to live. And people, if you focus on that, you can have that. If you focus on the other, you can have the other. I personally choose to focus on, I know a lot of billionaires in my life, and I'm going to be one.
I love it, dude. Thank you so much for coming on, Tim. Thank you guys so much for tuning in. If you are listening to this currently, we'll see Tim on Saturday. He'll be speaking on stage for a little bit. We're lucky enough to have him. Thank you so much, guys, for tuning in. Thanks so much for coming on.
Thanks for having me, bud.
Thank you so much for tuning into this episode of the Winning Move podcast. I hope it helps you make all the right moves in your life and business. Please make sure to go like and subscribe on any podcast platform that you're listening to, and make sure to go follow me on Instagram @StratDaddy. Thank you guys.